Today I will be sharing with you 5 tips to improve your cryptocurrency trading. Let's dive right in. Hello everyone, welcome to O Trading. My name is Mark and today I will be sharing with you 5 tips and one bonus one to improve your cryptocurrency trading. So tips number 1, trade only with the amount of money you're willing to lose. These tips may seem stupid, you obviously don't want to lose any money and that's why you're watching this video, me neither. But the idea is that often when you start with a very small amount just to try it out. Then if you're lucky, beginner's luck or whatever, you make some good profits and then suddenly you increase by a lot the amount of capitals you're playing with in the hope of reproducing these same profits. But now that you have a lot of money in the game, you buy a lot of different cryptocurrency, you open a lot of different positions, and you expose yourself to a lot more losses. Maybe you're lucky and you make good profits, I hope so. But normally when you increase the amount of capitals you're playing with, 80% of day traders actually lose money on their first years. So be careful because it's not because 1 month or 1 week you did very great profits that you're going to be able to reproduce these every month. It's very hard to reproduce the same profits day in, day out. It's very easy to make profits when everything goes well, like in bull market. It's much harder to make profits when everything stays stagnant or everything go down in bear market. So it's easy when you start investing to make good profits if everything go well, everything go up, and then when everything go down, you start realizing that your strategy is not foolproof and you're starting to lose a lot of money. So remember, always invest only what you can afford to lose. Tips number 2. Write down each of your trades and each of your strategy, your exit price, on a piece of paper or on an Excel sheet and stick to your exit price. So when everything go up, we always want to make more profit. So if you bought something, a cryptocurrency at a price, you told yourself you're going to sell it at 5% or 2% higher, then it goes to that price. Often we're hoping that it keep on going up and we don't sell and we end up with the short end of the stick when it goes even lower than our buying price. So when you said to yourself you're going to sell it to a price, if it reached that price, sell it. Put your limit order to sell it in advance and stick to this price. This is very important to write down all of your trade, and that's why an Excel sheet can help a lot because you can calculate automatically your transaction fee on that sheet and see if you're actually profitable. Tips number 3 is gonna be really important to that because sometimes you can be trading pairs that are not in US dollars or in euros, so it's not very clear the amount of money you're paying in transactions. If you're trading pairs on bitcoins pairs, then it's much harder to see how much of transaction fee you're paying on each of your trades since everything is in Satoshi. Tips number 3, count your profits and your losses in Bitcoin or in Satoshi. So to explain this one, I'll go a bit more personal. Me, myself, I started trading Bitcoins around mid-2017. And back then I used to trade a lot of different altcoins paired with USD, especially on Bitfinex. And back then everything was going up. Every month, many different cryptocurrency will just rally up like crazy. So profits was very easy to make. You could easily buy cheap Ripple at 20 cents and sell it then after that a month later for 40 cents, 45 cents or more. It was amazing. At the end of the year though, as everyone knows, Bitcoin reached almost 20,000 US and then it crashed much lower. But even at its price after the bubble explodes, so around 11,000 at the end of December, beginning of January, I still had less Bitcoin that I started with because I made great profits in USD. But the amount of Bitcoin that this USD was now worth was still less than I started with when Bitcoin was around 3,000 US. Because when everything go up, it's pretty easy to make profits in USD, and it's much harder to make profits in Bitcoin. But if from the start you only look at your profits and your losses in Bitcoins, then you're sure to always have the same or more Bitcoins, hopefully. And when Bitcoin go up, you make much more profits. So if you're like me and you believe that Bitcoin is the main cryptocurrency to hold, then that's definitely a strategy good for you. Full disclaimer, I hold pretty much only Bitcoin and a handful of other cryptocurrencies like Litecoin, Monero, and few other much smaller projects. But since Bitcoin represents 60% more or less of the entire market capitalization of the cryptocurrency space, definitely if you're investing in cryptocurrency, you should be investing first in Bitcoins. So if you look at making your profits and your loss in Bitcoins, then if you're profitable and you end up with much more Bitcoins, at the end when Bitcoin will go back up to a new all-time high, you're going to make way more money if you exit at that point. For that, I will suggest you trade altcoins paired with Bitcoins, and that you use tips number 2 and record all your trade and make sure that you're profitable, that you convert your Satoshi in USD to make sure how much you make for each trade and how much you're paying in transaction fees. Tips number 4, use only reputable exchange and make your homework on the exchange that you're investing in. So when investors start investing in Bitcoins, they often don't do any homework and they just click on one of the first links that they see to buy Bitcoins. Or they go for the cheapest transaction fee or the best promotion that they can find. But the cryptocurrency space is extremely unregulated, and therefore there's a lot of scam cryptocurrency exchange, of exchange that went bankrupt or exit scam and left with all the funds that they had from their investors. So once you transfer Bitcoin to an exchange or to someone else, there's no way you can get these Bitcoin back from your own. You don't have any more control on those Bitcoins, except the control that this exchange gives you. So if they just close the website, you lose your money. That's simple as that. So that's why it's very important to do your homework and invest only in reputable exchange. I'm not saying that there's no risk in investing in reputable exchange. There's still some risk as far as you're not controlling the private key of your Bitcoin. But the risk is much smaller if you invest in much larger exchange than local exchange or very small exchange. They have much higher security levels. So this video is not sponsored by anyone. I'm not affiliated with any exchange, but on the top of my head, I could suggest you exchange like Binance, Coinbase, BitMEX. These are large exchanges that have so far a pretty secure track record. So I will leave link in the descriptions for these exchanges. Full disclosure, those are referral link. So that was tips number 4, stick to reputable exchange. Moving on to tips number 5, don't participate in pump and dump or signals group. So if you're on social media like Telegram, Instagram, Twitter, or even Discord, you're gonna see a lot of groups or channels that are called pump groups or signals groups. These group of channels are what we call pump and dump. The idea is that the organizer of the group will share with you at one specific time one cryptocurrency, often a very unknown and small cryptocurrencies that everyone should buy at a given price at the same time. The idea is to inflate the price like crazy, so when the price go up, you can sell it at a profit. They will promise you or tell you that you can make easy profits this way. The catch there is that often these groups comes in pair with a private and a public groups, where the organizer and the private members, the people that pay subscriptions to this group, get the informations of which cryptocurrency they will buy in advance. Then the public group get the information minutes or hours or days later to make sure that the private member and the organizer of this pump and dump make a lot of profits on the back of the free member, the open groups, by having bought this cryptocurrency at a much lower price. So the problem there is that you're very not sure if that cryptocurrency is going to keep on going up after you bought, or if you're not the last wave of person that bought this cryptocurrency. So you can easily end up with the short end of the stick, having bought a cryptocurrency at a much higher price that it will never go again. I'm not saying at all to go and pay for a subscription to these private memberships of these groups, because again, profits are so not assured at all, especially in times like this where volume is just so low across all different exchange, and the attitude, the emotions towards cryptocurrency is much lower than in big FOMO time when everyone have the fear of missing out and people are just dropping money on all different cryptocurrencies. So it's definitely not profit assured. It's more a catch to make you lose money. Another way that these groups work is often the organizer, the administrator of the group, is paid by the cryptocurrency managers, the owner of the cryptocurrencies, to send traffic, send volumes toward these cryptocurrencies. The way it works is a lot of exchange will give a minimum limit of volumes that each cryptocurrency have to reach every month on their exchange to stay listed on the exchange. So if the cryptocurrency have much lower volume than it should to stay listed, the organizer, the administrator, the employee behind that cryptocurrency will pay signal groups or pump and dump groups or other big traders to send traffic, volume traffic on that cryptocurrencies to make sure that this cryptocurrency remain listed on that exchange. So even if the private member, for example, are not making profits with this pump and dump scheme, the organizer will still remain profitable because he is paid directly by the cryptocurrency itself to send this and make it popular to buy whatever small altcoins they're selling you. So tips number 5 was to not participate in any pump and dump or signals group. You can still see the information and judge by yourself after many cycles to see if this group give you valuable information. So I suggest you stay away from these groups and channels. I don't suggest you participate in these groups, but you can always keep an eye on these groups and try to see a pattern if there is any. Maybe you can outplay them, and that could be a good move to do. And buy the cryptocurrency much cheaper before it even been announced, if you see that it's often the same cryptocurrency that are announced. So tips number 5 was to not participate in any pump and dump group. Tips number 6, the bonus tips, is to learn to take your losses. So this is probably the hardest things to learn when investing, and that apply to cryptocurrency, forex, or stocks market, is to learn to take your losses. You're never gonna be always right. There's always be a lot of times that you invest in something and it just don't pan out. It go directly in the opposite direction that you hope it will. So you buy something and right after you bought, it just tank like crazy. The most important skills that will make the full difference on if you're profitable or not is to learn to take your losses. That means that if you realize that you're wrong, take your loss, exit these trades, and go trade somewhere else or remain stagnant. We humans always want to be hopeful, and we hope that even after a tank, it will go back up, but sometimes it's just never the case. Some cryptocurrency will almost never go back up, or some will take so much time to go back up that if you will have exit and trade on the side with other cryptocurrency, you will have make your profit again much faster than if you just wait a year or two for that cryptocurrency to go back up. So this is from far the hardest skills to learn for being a good cryptocurrency trader or any trader in any way. But it doesn't mean that you always have to sell every time that the cryptocurrency you invest in is going down. It just means that every time, every day, or every weeks, or every hours, if you trade at a very high frequency, you have to question yourself and think again if your strategy still work in the current situations. Because everything can change from one day to the other. If tomorrow the Bitcoin price tank, it definitely have a very huge impact on different cryptocurrencies. If the day after Bitcoins go back up 5%, what impact will it have on your position that you have open? That's the question that you always have to ask yourself and trade accordingly. So it's sometimes much better to close all your positions if you don't know at all what the market is doing than to keep positions open hoping for the best. On that, I wish this video has been very helpful for you. If you like these tips, if you like this video, give me a thumbs up, like this video. If you have any comments, if you feel like I didn't cover any of your favorite tips, leave them down below in the comments. On that, I make new video about cryptocurrency news on Monday, Wednesday, and Friday of every week. So subscribe to this channel for more of these informative videos and more cryptocurrency news. Have a great day.